Welcome to Alpha Recap, your aftermarket digest from stockalpha.ai. Markets are closed, and we're walking through the biggest headlines from today. As always, if you have questions, you can reach us at stockalpha.ai.
Good to be here. Big day. Some tech drama, legal noise, and a few quieter industrial threads that are still worth watching.
So, what really stands out here is Netflix. The stock finished the day down about 45% year to date, and that created the biggest gap from its 200-day moving average in about 4 years. That kind of technical extreme is a red flag for momentum strategies. It tightens stop losses and can trigger trend-following sell signals.
Right.
I mean, when you step back and look at this, it's not just a headline. A big gap from the 200-day average means positions that rely on moving averages or volatility bands face higher downside risk in the short term.
And to add to that, today we saw that technical pressure show up alongside a wider theme: rising AI infrastructure costs.
Yeah, that tracks.
SoftBank's sharp drop pushed Asian tech names into the red, and reporters linked the move to higher capital spending and compute bills tied to AI deployments. Basically, higher CapEx and ongoing cloud compute costs eating into margins.
Right. And the other thing is, Apple raised device prices. That can slow upgrade cycles. If devices cost more, consumers may hold on longer, and that reduces chip volumes over time. So higher unit prices plus higher AI infrastructure bills is a two-way headwind for semiconductors and cloud providers.
Not a great day for chip stocks for sure.
So, what really stands out here is how connected these stories are. Rising compute bills increase the capital intensity of rolling out AI. If device vendors pass on costs and replacement cycles slow, analysts' assumptions about chip demand, the units and upgrade rates baked into earnings models, can be challenged quickly.
Exactly. Momentum traders and sector allocations tied to semiconductors, cloud infrastructure, and the AI stack are going to be watching guidance and capital spending commentary as near-term focal points. Another notable angle today was a wave of shareholder notices and law firm solicitations across a wide set of names.
Yeah. Firms sent notices covering companies like Veritone, Lucid Group, BitGo, Zoetis, Calyx, NanoX Imaging, and more. There was also a Form 4 filing for JP Morgan that flagged sizable percentage entries that will be worth watching.
Hold on, say that again?
Those law firm notices are basically invitations to be a lead plaintiff in potential securities actions. They don't move markets on their own, but they increase the probability of litigation-related disclosures, reserve announcements, or reputational hits down the road.
Right. And when that happens to small and mid-cap names, it can amplify headline-driven volatility because liquidity is thinner, and a single class action can materially change sentiment.
Honestly, I was a bit surprised by this one.
There's been a steady increase in securities action notices over recent weeks, and today's breadth suggests it's not isolated to one sector. So expect follow-up filings and court dockets to be something to watch tomorrow.
Switching topics. Industry events painted two competing narratives today: demand for AI-enabled supply chain modernization, and at the same time, questions about the cost profile of AI infrastructure.
At the Beijing Supply Chain Expo, companies were talking enterprise AI deployments, a clear demand signal for vendors and supply chain tech providers. But investors are also asking, how profitable will those deployments be once you factor in hardware and compute costs?
And regulatory risk popped up too. Italy opened a probe into Microsoft over subscription price increases. Details are still thin, but it highlights that subscription pricing models, the backbone of many software businesses, can draw regulatory scrutiny and affect deferred revenue dynamics.
Right. Product announcements and partnerships at events can be positive signals for future revenue, but probes and cost shocks can quickly flip sentiment. Energy transition and industrials were quieter, but important. At the European shows like EES and Smarter E, companies such as StarCharge and Kaifa showcased new products and partnerships, early-stage signals for electrification and storage adoption in Europe.
And in transport, China Southern Air Logistics ordered 7 Boeing freighters. That's concrete demand for air cargo capacity and a potential support for aerospace aftermarket suppliers tied to Boeing.
These are the kind of developments that matter more to longer-dated demand assumptions than to day-to-day market moves.
Exactly. Small step execution matters here. Watch partnership rollouts and contract announcements as the higher probability revenue catalysts.
On healthcare and biotech, there were a few program-level updates that reduce execution risk. Johnson & Johnson released Phase 3 data for IMAAVY, showing sustained control in subgroups of generalized myasthenia gravis, promising from a clinical standpoint, though no revenue guidance followed.
Siren Biotechnology landed about $8 million in a non-dilutive grant from the California Institute for Regenerative Medicine to support SRN-101 in high-grade glioma. That's a financing win that eases near-term dilution risk for that program.
And Biolab subsidiaries got accreditation from the American Association of Tissue Banks, which is an operational validation that can smooth commercialization paths. These are incremental but meaningful for development stage names.
Let's touch active trading and liquidity. Some tickers showed heavy flow today. American Airlines shares rose about 0.75% on roughly 203 million shares. The Bitcoin futures ETF slipped about 1.25% on about 300 million shares. A certain GPU accelerator name rose a fraction, about 0.4%, at thin prices but heavy volume. And that leveraged bear ETF fell about 2% on nearly 369 million shares.
Traders should remember those spikes often reflect short-term liquidity and flow-driven volatility rather than fundamental shifts. Match trade size to depth and average daily volume to avoid slippage.
Tesla remained in a short-term downtrend near $380, with hourly technical bands showing layered resistance. For traders focused on hourly bands, that's a spot to watch for breakouts or continuation cues.
Roundhill Investments passed about $30 billion in assets under management and ranks among the top thematic ETF issuers year to date. That scale changes fund flow dynamics and liquidity in those thematic pockets.
Infrastructure Capital announced a dividend increase for its NASDAQ Option Income ETF and confirmed monthly dividends for other issuer funds. Payout details are pending. And small cap financing. Fibrobiologics raised about $3 million in a private placement, which helps near-term liquidity but brings dilution caveats to watch in follow-ups.
So, what really stands out here is the mix of litigation risk, AI infrastructure friction, event-driven demand cues, and concentrated flow moves.
Yeah, the patterns we saw today. A litigation wave across sectors, AI cost pressure amplified by device pricing, and event shows that are promising but execution sensitive. And fund flows remain a major short-term market mover.
Quick reactions. 3 short ones.
Right. Yeah, that tracks.
Before we wrap, a few concrete things to watch tomorrow. Follow-up filings and court dockets tied to the shareholder notices for the names we mentioned. Any guidance updates from major chip makers or cloud vendors on AI infrastructure spend. Statements from Microsoft and the Italian regulator about subscription pricing, and the technical levels for Netflix versus its 200-day moving average, and for Tesla around the $380 hourly bands.
Also keep an eye on Boeing and China Southern for more detail on that freighter order, model types, delivery schedules, and issuer notices from Roundhill and Infrastructure Capital, clarifying dividend amounts or flows.
Key takeaways. 1. Today reinforced that AI is a cost story as much as a demand story. Higher infrastructure and compute costs can pressure margins even as deployments expand. 2. Legal and governance noise is broadening and can amplify headline volatility, especially for smaller names. 3. Event announcements are useful signals, but execution and follow-through matter most for translating buzz into revenue.
And a quick reminder, this episode is informational only. Analysts note trends and potential catalysts, but we are not offering personalized investment advice or recommending you buy, sell, or hold any security.
If you want to dig deeper on any of these items or send us a question for the next episode, head to stockalpha.ai and use the Q&A feature. We'll answer as many as we can live.
For more market analysis and insights, visit stockalpha.ai. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll see you after the next close.